we'll start with our stock of the day. Turns out it is a gold miner. That is the one bright spot on the market today. The gold miners are doing well. That's, of course, ahead of the expectation of the Fed cutting by this time tomorrow. We know how well gold has done this year. So let's get into Ramelius Resources. It's rallying. It was actually higher to begin with, but that's on news that it will begin a $250 million on-market buyback and lift its minimum dividend. The WA-based gold producer is offering a buyback of up to 74 million shares. Its board has also approved an increase in the minimum dividend to 2 cents a share for the year, and the stock is up some 70% year to date. That's after gold prices have rallied across the course of 2025. So what can we expect for Ramelius and perhaps more broadly for the gold sector heading into next year, Henry?
Interesting, isn't it, Ramelius? And interesting the gold market at the moment. Let's face it. This week we've had the US administration outline their long-term strategic vision, and that doesn't seem to include European countries very much in that. And of course we've got the Putin Ukraine war going on at the moment as well. So there's a lot of geopolitical issues out there, as well as the rates hopefully being cut by the Fed on Thursday morning, that's keeping the gold price up. So I don't think it's just a question of interest rates. But what is interesting with Ramelius, I guess, is that it just shows how much cash these gold miners have got and will continue to pile up in the corner, because the gold price is where they are, 6,300 Aussie dollars. That is a big price. There's many a gold miner, including Ramelius, that is going to be pretty happy this Christmas. And the buyback is a sensible way of deploying capital. I guess the fear always is that companies will do some sort of M&A, which may not work out quite so well. So a $250 million share buyback gives it flexibility as well. The dividend policy has doubled to 2 cents from 1 cent. And the buyback, as I say, does give it that flexibility, because you can put it in, you can take it out. It's a bit like the okey pokey, to be honest. So you can pull back if things dictate that. If the gold price was to collapse to $2,000, they would certainly be pulling back the share purchase plan, the buyback there. So it gives them that flexibility. But as I say, it does highlight how much cash is really around for these gold miners, and that's going to become apparent over the next quarter and the quarter after that. And it's not just a question of how high the gold price goes, it's how long it stays at those highs. If it goes to 4,500 for 5 minutes, well, that all looks good for the media and gives it a bit of clickbait, but ultimately you've got to be pretty quick on your toes to lock in that price as a gold miner, if you're even going to hedge at all. So it is higher for longer, which is important, and this shows how much cash these gold miners are going to have, and the sector is still undervalued and pregnant with updates. I suspect if it holds in for the next quarter, we will start to see those upgrades come through.
So the call on Ramelius is?
Well, I think it's I think the whole gold sector is a buy still. It hasn't changed. Put some gold under your Christmas tree this year. Maybe even put some silver as well if you're not into the gold story.
Says the man with a bit of gold behind his head. It is that time of year. Andrew, what are your thoughts?
Yeah, look, I agree. I think certainly gold, if we sort of look at the macro first and then sort of move to Ramelius after that, from a macro point of view, you've got a lot of central bank buying. I was just reading some analysis before suggesting that maybe 2026, up to 70% of all the transactions in gold in next year will be central bank buying, which of course is really interesting, because if we turn our minds to the late 90s and early 2000s, when a number of central banks were selling gold, including the RBA, and obviously we're still concerned about inflation. Coming back briefly to what we were talking about with the RBA before, that's why we're not going to see any more rate cuts in the near term. And potentially looking at those rate hikes, because the inflation genie is certainly well and truly out of the bottle. So from a demand point of view, there's the central bank buying, and there's also concerns about inflation. And then on the supply side, you've got a lack of quality projects coming through. You've got high extraction costs. And for those whereby there is ability to potentially do transactions, there's jurisdiction risk or sort of legislative risk. So it certainly paints a very positive picture for gold, at least maintaining these prices. So if we then sort of delve into Ramelius, and again, everything, I agree with everything that Henry is saying relating to how they're running their business. That buyback is obviously supportive, which is why we've seen the spike in the share price. Again, some of my tells, both the chair and CEO continue to buy, despite the fact the share price is continuing to rally as much as it is. I was looking at it the last time Henry and I looked at this was now a couple of years ago. Daily turnover has gone from $5 million a share, or $5 million a day. For Ramelius, it's now $44 million a day. So there's certainly plenty of interest in this one. You've got insider buying, which is a positive. You've got a very supportive macro environment. So I think it's a buy.
There we go. We're kicking off with a double buy for our stock of the day, Ramelius.